Well, Rodney, it looks like we passed another tax deadline. Did you get through it okay?
It's always good when the deadline is in the rear view mirror.
It's always
Tell you
good.
that.
I agree. My name's Chris Caldwell. I'm a partner financial planner with Highland Trust Partners. I'm here with a good friend of mine, Rodney Chandler, who's a CPA and managing partner at Smith Adcock Company here in Athens, Georgia. I asked Rodney to take a couple of minutes with us just to go through some tax questions.
Mhm.
I figured if I'm going to have a tax conversation with anybody, it's good to go to the expert around. So I think I can easily say that Rodney's definitely one of those. I have a lot of clients who have called lately regarding Rodney this year potential tax increases,
Mhm.
right? Tax changes, what could happen to them personally, and I continue to remind clients over and over that these are proposals.
Mhm.
Things have not passed yet. There's a lot that has to be done between now and when something becomes an act and passes into law. So one thing I wanted to ask you, one of the questions for today is, I'm telling people to be patient. I'm
Mhm.
saying we need to definitely take a hard look at your personal situation as a business owner or a family. Really know your situation well and be prepared for if there's something that is put through legislation and is actually passed. What are you telling clients right now if they call you with these same questions?
Well, thanks, Chris. I appreciate the opportunity, and it's always good to collaborate with you in trying to help your clients. It's been a great relationship for us as well. And I'll tell you, clients really hate uncertainty, and uncertainty has just been the environment that we've all been living in a tax environment for the last 3 or 4 years. And that's only gotten worse with a change of administration and all of these proposals that are kind of floating around out there. And it's really a difficult position for us to be in as planners and thinkers trying to help our clients get in the best position when really wait and see is what is the best advice that we can generally give. Now maybe we'll talk about a few things that some clients ought to be doing, but as a general rule, I don't like to make decisions when we don't know the rules.
Right. Well, and we see people every once in a while want to overreact,
Mhm.
try to do things before there's a reason to do it.
That's right.
And so, in complete agreement, what we're telling people is just to let's be patient. Let's analyze the situation, and of course, they need to know where they are
That's
and,
right.
and what may happen to them in their business and personally this year. But that way, they can be prepared.
That's
That
right.
way, they can be prepared when there maybe is a change. So another question I get a good bit of is regarding high income earners. Of
Mhm.
course, we have a lot of clients who are high income earners, and whether they're a business owner or they're a W-2 employee, there's not a whole lot they necessarily can do. Business owners can do things different than a W-2 employee, but to try and lessen that tax burden. So those high income earners are some of the ones that call the most. If a bill passes, it seems like it's going to affect high income earners more than others. What should they be doing? Now, a lot of what we say in a lot of cases is let's look at seeing if we can defer more of that income and retirement accounts and things such as that. What other strategies, regardless of their tax act or not, but what other strategies are you telling some clientele year over year that are who are higher income earners to really help them do a better job of maybe reducing that adjusted gross income, pay a little bit less in tax
Sure.
a year?
That's a great question, and from all the proposals that are floating out there, I agree that it's the top income earners that are really in the crosshairs of the Biden proposals. And I'll say once more about uncertainty, it is, I'll say it this way, I've never been good at predicting what Congress will or will not do. And right now, with this Congress and this environment, I don't even try. It is the most, I'll let you fill in the blank. It's the most something that we've ever seen in our lifetime,
Right.
for sure. Now, when it comes to what advice I'm giving to small businesses to reduce their tax burden, you hit on the key one, and that's deferral. There is a wide range of deferral opportunities available through several different types of retirement plans and retirement strategies, that's one of the first places that I go. Certainly we want to make sure we're taking advantage of all the deductions that they can legitimately offset against their income. So deferral and deductions are the two key ways. And then they really ought to be looking, if they're a successful small business, at what's coming down the pipeline. So we can strategize about timing, whether it's purchasing equipment or purchasing real estate or a building, or whether it's an exit strategy and when that might happen. All those things factor into the advice that we're giving our small business clients.
Right. And you know, with retirement accounts too, retirement plans for businesses, I've read a lot in the last couple of weeks that while some it may be taken away with tax increases and potential tax increases and things like that, we are seeing a little bit more come out with potential adoptions with credits and other things for small business owners, increasing what you'll be able to get out of saving a little money, implement a plan for you and your employees as well. So that's a good thing to consider. They take away a little and maybe give back a little. We'll see how that plays out.
And I'll mention one thing that's fairly late breaking on a state of Georgia specific issue for small businesses. The governor signed in early May a piece of legislation that would allow small business owners a workaround to the state and local tax deduction limitation that we've had for the last several years. The regulations haven't been written on that yet,
okay.
but it looks like they can make an election, and I know this is getting a little technical, so forgive me for that, but again, for small business owners, they can make an election to pay the tax on behalf of their shareholders at the company level, and get a deduction that they would not have previously been entitled to due to the state and local tax cap.
I'm glad you pointed that out. So my next question, third question, has a little bit to do again with business owners. As a business owner myself, a pass-through entity, you know, we have a business income deduction, qualified business income deduction we can take, and I've heard a lot in the proposal that could be one thing that is more than likely of everything listed that could go away in some capacity. If besides that deduction that we can get, is there what other, and we talked about retirement plans, is there anything else that you're paying close attention to for small business owners as far as credits deductions that they need to, maybe though they're not doing very well, or maybe you take on a new client and realize you haven't been doing something the last couple of years that maybe you should consider? Is there things such as that?
There are some real technical things involving certain elections that can be made with different activities that can matter when it comes to aggregating income and losses from real estate or from business entities. So those are some pretty technical things that we can do. We certainly talk all the time about purchasing credits to offset state taxes at a discount. I refer to it as paying taxes with a coupon, which can shave several percentage points off of someone's tax bill. For high wealth individuals, there are a couple of proactive things in this uncertain environment that we are looking at, but that's really at the top tier. And it involves estate tax planning and perhaps gift strategies that involve sort of a different layer. So there are some proactive things, even in this uncertain thing, that we might make some moves with.
Okay, that makes complete sense. And I see a lot of course, people come to us eventually, been DIYers for a long period of time, doing their own taxes, doing their own financial planning, and finally come to the realization maybe they're missing something. So that kind of goes back to, it's good to really ask the expert, if you will. So my last question for today is regarding something I've talked to clients about for years. I just want your opinion on it. Is around Roth Conversion. So if we have a lot of clientele who, and it goes back to question 2 with tax deferral, we have a lot of clientele who retire, whether a W-2 employee or own their own business, and they have a pretty sizable amount of money saved. They do a great job deferring, a great job saving, but that's money eventually taxed one day, of course. And we don't know what the RMD, required minimum distribution year, has changed recently and could change again, and that's in conversation as well. But if this potentially for a a higher income earner, or for anybody in general, could be a if we could see their income tax go up over the next couple of years and maybe be higher in retirement years. These are people later in their, maybe in their 60s or so, still working. But would it be a good strategy to really talk to them about considering, if this is perceived to be one of the lowest tax years we'll see in the foreseeable future, to go ahead and maybe do some conversions this year to protect themselves later in life and being forced to take distributions out of deferred accounts?
Sure. I think that Roth retirement accounts offer a great deal of planning opportunity, whether it's doing a backdoor Roth and getting money into the Roths to start with when you otherwise wouldn't be eligible, or as you're talking about, converting pre-tax money into Roth money. Those can be great strategies. Now, I'm a tax guy, so I hate choosing to pay tax on purpose. So it hurts my soul to agree with you that sometimes making that conversion makes sense.
Right.
But it really can, and it can make sense if you have the flexibility of planning when you're going to take income. Let's take 2020 as a perfect example. 2020, you didn't have to take any required minimum distributions at all. And maybe you had retired and you didn't have any wages that year, so it was an artificially low income year. Well, you could have taken some 401k money or regular IRA mony and rolled it to a Roth and stayed in the very lowest 10 or 12% tax brackets even. Or if you had more, even the 22% tax bracket might have made sense. So looking for opportunities like that is great planning, but you can only do it if you know what you have, and know your situation, and talk with your guy or gal to know what's coming down the pipeline.
And definitely a case by case scenario.
Absolutely.
I mean, that's the one thing with everything we're talking about today too, is that everybody's situation is a little bit different. We don't believe in cookie cutter or anything, so it's unique to the family, unique to as a business owner.
Absolutely,
so make sure that you're having those detailed conversations with experts to assure you're making the best decision you possibly can make for your benefit. Well, so today was just a quick overview of a couple of things, Rodney, some questions I've gotten, some conversations I've had with people. Is there anything else you want to share that you've talked to clients about, or personal feelings about certain things, professional feelings about certain things?
No, I just am thankful for the opportunity, and we always like spending time with you and helping any way we can.
Well, I appreciate it. So as you're going out this year and you have these concerns, these questions, what I ask you to do is call somebody. Make sure you have somebody you can talk to, a great CPA, a fiduciary financial planner that you can sit down with and go through your case situation. Our job is to take stress out of your life, I would say, not create more. So talk it through with people like us, and we'll try to guide you on the right path if whatever tax changes there are this year. If we understand you and your situation really, really well, if something is put through and a bill is passed, we can better help you make plans for your future and make the right decision. So with that, Rodney, I thank you. I appreciate your time today, as always. And thank you for tuning in, and we will see you later.
Bye-bye.